G'day legends and welcome back to another video. Bitcoin has managed to save itself from a potentially catastrophic bearish weekly candle close, having reclaimed the 50 EMA, the RSI and the Gaussian channel not only on the weekly but the 2-week chart. This is a good initial sign. However, it doesn't eliminate the risk of downward continuations as the price action is very much still showing weakness. In today's video, we are going to be discussing what this weekly candle close meant, whether or not Bitcoin is still going to see continuations lower, and what we are watching for that downward move, and how the price action is developing on the short term, having bounced around from that $100,000 to $105,000 region. Will Bitcoin continue upward? Are we breaking the downtrend, or is this nothing more than a short-term rally preceding a continued correction? Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. By the end of today's video, you'll have a detailed and well-rounded understanding of the weekly candle close, the immediate short-term price action, the exact trigger points to facilitate upward reversals, and even exactly what we are watching to be confident that next leg down will begin. We are going to be comparing historical price action to the current price action, as well as discussing momentum and variety of structural levels across multiple timeframes. If this is the kind of content you are interested in, you can also join us on Telegram, guys. This is the free channel down below. You'll get access to all of our charts, our analysis, our educational posts, our updates, news events, and really everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And of course, if you are interested in joining the VIP channel, you'll get access to trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You can go ahead and check that out too. Let's jump on in. So, a pretty big intro there, but we have a lot to take a look at. As we know, we've been talking about the 50 EMA, the Gaussian channel, and the RSI on the weekly chart for a couple weeks now. These levels hold massive macro significance, as historically, the loss of these levels on the weekly chart is exactly what kind of triggered the beginning of those prior bear markets. So we take a look at when these prior bear markets started, just looking at the 4-year cycle here, the macro price action of Bitcoin, we saw the loss of that 50 EMA and Gaussian channel trigger that downward correction. We saw it happen again in 2018. We also saw it happen again in 2021 to 2022, and we are running the risk of that occurring again, as Bitcoin has just come into retest this on the weekly and it has managed to actually defend it, at least for this weekly close. Now, that doesn't mean this week we are going to hold above it, but it is a good sign, at least for now, that we have managed to actually defend this level. It goes to show, number one, there is still a little bit of demand here at that $98,000 to $100,000 level, but number two, these levels are points of significance because we are seeing reactionary price action develop around them. We'll come back and discuss all of this in today's video. Looking at the market data, 24-hour volume up 16%, actually pretty high considering we are just coming out of the weekend. Around 250 billion here, up 16. Looking at 24-hour liquidations, we're up 20%, 308 million. A lot of those liquidations actually coming from altcoins. Altcoins are seeing some pretty large moves toward the upside. If let's go to a chart really quickly and take a look at just a random altcoins per se, like Kotti over here, you can see some larger rallies toward the upside. Now, the reason we are seeing these aggressive rallies is because anytime we see the order books for coins just get absolutely decimated, it generally results in thinner books toward the upside. So anytime we see any sort of liquidity pour back into the coin, we have very, very thin order books toward the upside, which facilitates these rapid rallies, just liquidation moves resulting in large percentage gains very quickly, very thin books facilitating that move. Not kind of a rally we're looking for to trust, and definitely not the ideal kind of movement when you're looking for altcoin investing per se, because you want to have consistent, steady slow gains, not these pump and dump kind of moves, of course. But that's another story, guys. Let's take a look at everything else. The DXY has been chopping more or less sideways. We are sitting underneath that $100 level, as we talked about already. This is a point of major resistance. We held it as support for about 2 years over here. What is once support becomes future resistance. Any sort of rejection from this level may be good for the risk asset market. It might facilitate some sort of short-term recovery. However, it does look like that reversal toward the upside is beginning to develop. And of course, as we know, if we look at the macro direction for the DXY, so these higher time frame swings up, these higher time frame swings down, and potentially a swing up coming again, we know that there's about a 0.7 a correlation coefficient of 0.7, negative correlation, meaning that every single time we see the DXY move downwards on the macro, it's about a 70% chance we see the opposite happen for the risk asset market and vice versa. So upward would be bearish for the risk asset market. Of course, not 100% of the time, around 70% of the time based on historical macro data. The S&P 500, sitting underneath that 6,800 level, we came to test the 50 EMA exactly like we said we would. We are watching that 50 EMA very closely. If we lose the 50 EMA, that is the trigger for the bearish continuation, okay? So that is a support here. We are watching the 50, lose the 50 and expect the market to see an extended correction, hold above the 50 EMA, and there is chances for reversals and recovery. That is it, guys. Let's jump into Bitcoin. Before we jump into Bitcoin, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15% of all your trading fees, which can build up to 45% based on your trading volume. You'll support me making the content, and you'll support yourself trading on exchanges I use and I trust. Go ahead, we'll play an ad, and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back into it. So we'll come and talk about the weekly candle close in a second, but I want to discuss this short-term price action. If you remember our most recent video 2 days ago, from around that 17-minute mark onwards, we were discussing the short-term price action. And specifically, we were discussing the significance of this sell-side liquidity level at 98 to 100,000. We talked a lot about how the market saw a massive pullback and everyone was starting to turn bearish all the way down over here when they should have turned bearish up over here at the break of structure when weakness was actually being shown. We also talked about how what we can see develop here is sideways consolidation against the support. And the longer we see this sideways consolidation against the support, there is a chance we see absorption, and absorption can result in short-term rallies. We have now retested that first level of resistance within this bearish transition zone, which is of course 108 to 100 to 98,000, which is the $105,000 resistance. We'll come back and discuss this. But of course, as we mentioned in our prior video, we were not looking to take new shorts at this resistance or breakdowns. We were waiting to see first for this level to break, and only upon the loss of that 100 to 98,000 level, or the weekly closes below these trigger points, we would then expect the next move down. So again, go ahead and check out that assessment in our prior video, 17 minutes and 30 seconds onwards. We explained it perfectly for you guys, but let's jump into today's video now. Let's start with the weekly candle close, guys. So we're going to take a look at the 2-week chart first, because the 2-week chart and the weekly, some major things. Now, the 2-week chart has both a bearish thing and a bullish thing. Let's start on what was bullish. What was good to see was that we were able to defend this major bull market support band level. You can say that is that yellow cloud over here. This is a major point of directional support, dynamic support through the bull market. If we look at when the bull market started around over here. This is kind of when we broke out the macro downtrend. We had that massive descending channel formation. At the end of the descending channel, we had that massive falling wedge pattern. That was the reversal into an uptrend. And then we saw that consolidation and eventually a break into a bull market around 30,000. But ever since that macro upswing, that macro trend shift developed around that mid 20,000 level, we have been sitting mostly above the bull market support band. So you can see here on the weekly chart, we have literally just closed above that level again. And that is a fantastic sign, showing us again that this 98 to 100,000 level is a point of significance. It is a trigger point, and it is a point we are seeing some demand and absorption develop from, which is acting as the last line of defense for this macro uptrend. We've talked about it for weeks. If we lose this level, and we lose that 50 EMA, and we lose that Gaussian channel, that is going to be the sign that that was a confirmed top, and we will see an extended macro correction. We talked about in last video that this was literally the last line of defense. It is the lowest we can go while still having a macro uptrend develop potentially and recoveries develop possibly. If we lose this level, there is absolutely zero hope. We're very, very likely to see macro corrections lower. So this level needs to hold, and it's a very good sign that we were able to hold this on the 2-week chart. So breaking below there on the 2-week is going to be catastrophic. We know already that just simply breaking below 103,600 would facilitate that. You can see how small that price range is. It's about an $800 price range between us actually closing above and closing below. So it was a very close call. What we did see that was not a good sign, and this is by far probably the worst sign. This is going to be the 2-week breakdown here for the RSI. Now, this RSI trend line is essentially a representation, okay, of the uptrending momentum through the entirety of the bull market since 2022. The reason that is the case is if we look at when that uptrend started over here, and we look at the price action, every single respective low, so every lowest point prior to these upward swings, okay, we got another one over here, we got another one over here, we got another one over here. Every single low, we can map that out against a respective uptrend on the RSI. So this is the price action, and this is the representation of the direction of the momentum throughout that visible price action. Essentially, we have seen a macro negative momentum shift. We have seen a dent in the armor. We have seen a data point here that is different to what we have historically seen. Prior to this, every time we have retested the bull market support band, we have maintained above this uptrend in the RSI, which facilitated reversals. This time, we have not done so. We've maintained above the bull market support band, but we have not maintained above this level in the RSI, which could signify this weekly candle may actually maybe start green, but it could potentially end red. And if it does, we have no room to go down beyond this support, meaning we enter that steeper correction. So something to pay very close attention to. We talked about in a prior video that we are in a dire situation, and I believe that is a fantastic assessment of what situation we are in for Bitcoin right now. Literally right at a point of support that if we lose, we will see continuations lower. But of course, as we said in our prior video, support is support until it is not, and therefore this is where we've been taking profits on shorts. We're scalp trading shorts. We're not looking for swing shorts down here. We have no active swing shorts or down into this range until we lose that level, because while this level holds, there is a chance for reversal. However, the chance is very slim, but the market is probabilistic, not deterministic. So we need to actually position ourselves in alignment with that. We said in our prior video, everyone was starting to turn bearish over here. And although that necessarily might not be the wrong thing, because the trend is bearish and, you know, the risk of us seeing continuations is actually quite large, it is not about being right or wrong. It's about the timing of that. They were turning bearish at the bottom of this move in a point of support. Whether or not we go lower or not, that was a point of support where they should have done so as we broke deviation ranges, as we saw exhaustion upon all-time highs. These were the signs of weakness developing the trend. This is not a sign of weakness. So we'll see how this develops. We'll talk about it, of course, as it develops. That is the 2-week. Let's now take a look at the weekly chart. Now, the weekly chart for Bitcoin is actually a little bit better. We have pretty much no bad signs on the weekly chart. In terms of the weekly close, we saw 3 good things happen. We saw the bull market support band, well, that was broken down the weeks ago, but we saw the Gaussian channel upper band. Look at this, guys. Look at that. Hold almost perfectly within like a $300 range we held. The 50 EMA we have held, and the RSI on the weekly we have held. So this does something that I guess a lot of people hate to see. This delays the confirmation to a 1 to 2 week period. So we're not going to have confirmation that we're going to see these stronger corrections until we know already, the weekly close below the bull marks, below the Gaussian channel of the 50 EMA and the RSI. So we have to wait another 7 days to be confident that will happen. So through this next 7-day window, we have a golden opportunity, and this is the opportunity for the bulls. The bulls will have the opportunity to show us if they can absorb this selling pressure and reverse the trend. And if they fail to do so, the next weekly candle will likely be the weekly candle that triggers these bearish conditions and results in extended corrections. So they have a 7-day window to facilitate reversals, to attempt to actually execute these reversals and absorb the selling. And if they don't, well, we know what is likely going to happen. We're going to see these extended corrections to the midline, to the 200 moving average, and enter a traditional, what is likely to be a traditional bear market according to what we have seen from a technical perspective in the past, which is the breakdown of these significant levels result in these major corrections. Now, there is but one more level I want to talk about on the 2-week, and this is going to be the Ichimoku cloud, particularly the baseline of the Ichimoku cloud. So let's go ahead and bring up the Ichimoku cloud, the baseline. This is going to be this red line. We'll turn absolutely everything off. Bring that red line right there. We can see the baseline of the Ichimoku cloud has been defended as well. And we know already that the baseline breakdown historically has not only been the trigger point for exact bottoms for Bitcoin, but it also been the trigger points for bear markets for Bitcoin. So everyone yelling, we are in a bear market. We're not quite in a bear market yet. We talked about this in our prior video. We've seen major corrections. We've seen massive downward moves that have resulted in macro reversals and potentially risking us entering a bear market. We only really enter a bear market upon the loss of these levels we're going to discuss in today's video. Until then, the probabilities are downward facing. We have to be aware the probabilities are still downward facing. We still expect downward continuations, but there is hope. The buyers have hope. It all depends on what happens with this potential support level. It all comes back to 98, 200, 1,000. If they cannot defend this level, we enter steeper corrections that will take us into a bear market. If we can defend this level, we run the possibility of absorbing the selling pressure and maybe seeing a short-term rally. Now, will this rally result in new all-time highs? I don't think it's likely. But it could provide some relief for Bitcoin for a few weeks. Maybe a little bit of rally toward the upside before we then see these levels break. Okay, so it's important to note that just because we're seeing a green candle now on the short term, on the daily chart, okay, it doesn't eradicate all of this weakness we have seen from 126,000. Okay, I think a lot of people go into a mindset where they see, if I have to draw it out over here, it's like classic meme, right? It's like you see the price action go down and then you have this one little bump and then it's like the meme's like, oh, we're back or something, you know, like it's like, oh, we're back, the price is going up. It's like, I think people get into that mindset a lot. The same with like, oh, they see the price go up a little bit, a small little correction, and they're like, it's over. It's like that classic, it's back, it's over mindset. I think it's important to detach from that. The reality is the price of the asset is kind of irrelevant. It's more about the strength. And what we are seeing here is we're seeing absorption. We're seeing some momentum push back upwards. We're seeing weakening selling momentum at that point of support, which gives us hope for potential bounces. Now, will these bounces actually reverse the trend? It's unlikely. What would we need to see to be more confident in that? Well, we need to see a break of the downtrend. Simply put, this is our downtrending diagonal trend line. If we break the downtrend, we then actually have hope of pushing back up into these levels of resistance. But even then, these are major points of resistance. We could very much reject from there and push back down. For us to be saying, okay, the 4-year cycle is broken, we're moving into new all-time highs. The only time we're going to say that is kind of possible is when we start breaking above around 118,000, okay? Until then, we're watching for rejections from these points of resistance. The most immediate resistance on the short term we have got at the moment is going to be the prior point of support. So 107.5 to 108,000 is a point of resistance. We are watching for potential rejections. If we break or if we reject from there, we could see pullbacks again. If we drop back below 104.5, which is this point of resistance here, we will see corrections back into these lows. So pay attention to that, guys. I don't want to get too much into the short-term price action today. I think today's video is much more important, discussing the higher time frame, the implications on the macro. You know, we are seeing, we are objective, right? We talk about the facts. We are seeing positive momentum shifts on the daily here, which is potentially leading for a breakout. It's a good sign. We have seen some fantastic weekly candle closes. And as we talked in our prior video, we are at this major point of support. This is the line in the sand. I can't stress it enough that only upon the loss of this level will we enter a bear market. Only upon the loss of the levels we discussed today, as we've been saying this entire time, will we see extended and very likely aggressive macro corrections that will take us downwards for months, okay? But until we see that, there is a chance we see short-term absorption. There's a chance we see short-term bounces, but it's also important to note not to get ahead of yourself on these short-term bounces and assume that just because we're seeing a bounce here, that we're going into a new all-time high. That is not the case, okay? So this is a good sign. Good to see the market bouncing. And hopefully we maintain above these levels. Hopefully we don't enter a bear market. Hopefully we see a continuation to new all-time high, but we have to trust the levels. We have to trust the TA and trust the charts. Thank you for tuning in, guys. Have a fantastic rest of your day. You know what? Let me know down below. Do you think that these levels are going to break on the next weekly close? Do you think this week will be a week for the buyers? Do you think buyers are going to absorb? They're going to maintain strength. They're going to show the sellers that they are back in control. Or do you think this is just a short-term pump into the weekly and then we are going to see the rest of the week go back red? I want to know what you guys think. Of course, we don't really have biases. We don't try to predict the market per se. We react to what is happening at the strength. So we are watching these levels very closely and we'll trade the trend and we'll trade the horizontal levels. But let me know what you guys think. Thanks for tuning in. Catch you guys in tomorrow's video to discuss more. Have a fantastic day. We'll see you then. Bye.